Welcome to Explain the Charts. Today, April 23rd, 2025, we're analyzing Bitcoin, currently trading around $91,000. The news is buzzing with Bitcoin rebounding strongly, even surpassing $90,000 for the first time since March. We'll correlate these events with the chart data. Reports indicate optimism stemming from trade negotiations and investor appetite for Bitcoin as an alternative to the dollar and turbulent stock market. Let's start with the daily chart to get a broader perspective. We can see a significant uptrend in recent days, confirming the news of Bitcoin's rebound. Key levels to watch here are the previous highs from March around $92,000, acting as potential resistance. A decisive break above this level could signal further bullish momentum, potentially targeting $95,000 or even the $99,000 to $100,000 range, as predicted by some analysts. However, failure to break $92,000 could lead to a pullback. In that scenario, support levels to watch are around $88,000, a level identified by analysts, and then the $83,000 to $84,000 range. The daily chart shows increasing volume during this recent surge, adding conviction to the upward movement, though some analysts note the volume is light. We need to consider the potential impact of SEC's new chair, Paul Atkins, who is perceived as crypto-friendly, which may be a factor influencing Bitcoin's longer-term value. Now, let's zoom into the 1-hour chart for a more granular view. On this time frame, we can identify shorter-term support and resistance levels. For instance, look for support around $89,000 and resistance at $91,700. These levels can be used for short-term trading strategies. We also see that Bitcoin ETFs saw highest inflow since January 30th. The surge has had a large decoupling from traditional risk assets. Bitcoin's Easter weekend rally marks a shift in market sentiment as institutional players make their move. The key is whether this rally will last. Finally, let's examine the 15-minute chart for intraday trading opportunities. Here, we can see smaller support and resistance zones, allowing for very short-term trades. These levels shift more rapidly and are best used with tight stop-loss orders. Currently, we see some congestion between $91,200 and $91,600. A break of either level could present short-term trading opportunities. Bitcoin's key levels include resistance around $92,000 and $95,900 and support near $88,000 and then in the $83,000 to $84,000 range. A break above $92,000 increases the likelihood of hitting $95,000 with a solid chance, especially with continued positive news and high trading volume. Conversely, failing to hold $88,000 increases the likelihood of dipping into the $83,000 to $84,000 range, which would reaffirm a bearish market sentiment. Keep an eye on upcoming economic data releases and any news regarding regulatory developments, particularly any comments from the new SEC chair. Any hints of easing by the Fed would likely act as a catalyst for further gains. That's all for today's analysis on Explain the Charts. Happy trading, and remember to manage your risk.